Hey, good evening, everybody. Welcome to Sunday Night Setups on March 26th, 2017. My name is Joseph Cusick with the Cusick Group, securities offered by MoneyBlock. I hope everybody is still having a wonderful weekend, but I am back at work. It is Sunday night. We want to check out everything that is going on right now in the markets and kind of set the tone for this week. And as you could tell from the way that the day ended on Friday, this week is going to be volatile at the very least. With the healthcare bill being basically kiboshed, bottom line is that tax reform is now on the docket and we're going to move away. A lot of turmoil in Washington, but let's make that spell out to opportunity for us here in the markets. Taking a look at the markets early on Sunday night, you see the S&P 500 down 13 at 2329.75. It opened up, gap down, and basically has been challenging the downside all evening long. Taking a look at the Dow Jones, the futures are trading right now down 95. The Dow 30 trading at 20,472. Again, a gap down here. It's broken its 20-50 and it's below its 200-day moving average on a 30-day. Or 30-minute. If you look on the daily, right here, it's in this war zone right here. On the Dow Jones, you want to watch 20,389. That's going to be a blood point you're going to want to watch. What is been the, I guess, silver lining of everything right now in the strongest sector of the market is tech. The NASDAQ right now is trading down 29.50 at 53.43.75. It's now broken through with some conviction the 20-day moving average. That means that the short-term bulls in technology are under a little bit pressure, but again, we're going to want to see this area right in here, the 5,300 area, be challenged before we start to think that tech is going to have some weakness. A break of the 50-day moving average coming in at 52.60, that could be significant as far as a trend shift in the overall tech market. One thing that I want to take a look at is while U.S. stocks are under pressure, right? We anticipated this. They've been moving and kind of grinding up to this area up here. I'm looking at the S&Ps. Broke its 20, challenging its 50. As a matter of fact, I'm going to watch the overnight action. Watch 23.25 on the S&P E-mini futures. A break at 23.25, which is only 5 points away. That's going to put the bulls on notice, both short-term and intermediate term. This could put institutions in a place where they might be cycling out after some pretty impressive profits. But where do you start to look while this market starts to work itself out, right? We're going to start picking some areas where we're going to want to add to a core long portfolio, as well as take advantage of some premium selling, because I am an options guy. But where are you looking at as far as performance, where you want to say, well, where out globally are things doing well? And if you look at the all-world index, it's been moving to the upside quite well. We're going to watch Japan, China, Hong Kong, Germany, France, and the UK, just some of the notable ones that we'll cover tomorrow morning. But taking a look at this ETF, EFA, this is basically taking a look at Europe, Australia, and the Far East. It takes all those stocks, puts it in a nice ETF that's also optionable. That's what I think is very important. I only trade stocks that are optionable, and I also have liquidity that has to be on my side for both the underlying, first and foremost, and then for the options. So if I actually do a comparison chart of taking a look at the EFA comparative to the S&P futures, I'm actually going to take a look at this. Okay. Oh, sorry. So I'm doing a comparison right now. I want to just get the scale and percentage, and I got to do this real quick. All right. And see, what you're seeing here is this red line right here, this one up top. This is the all-world index. It is continuing to move to the upside while the U.S. markets are moving to the downside. If U.S. markets start to get bearish in both the short and intermediate term, which right now they are, this is where some of that money could be moving out of the U.S. and we could be putting it into areas like Europe. Yes, there's some volatility with the elections going around in France, and that will be going on in the spring in Germany. But you also have the Far East. China has put out some decent numbers as far as PMI, as far as growth. Yes, there's some pressure and some uncertainty there. Japan has been doing well. Their currencies have been holding up. Again, this might be the time where you start looking at adding a little more exposure to the world markets versus starting to add exposure or to build new exposure into the U.S. markets until we can start to get some sort of base, or in other words, some momentum to the upside. Now, one way that you can look as far as a strategic approach is layering in some short puts at various price levels. What do I mean by that? Well, basically, if you go into either the MarketStream, our latest videos, you can go into Strategy Now, where I actually talk about doing short put strategies and laddering them in. As a matter of fact, it was on the 21st of March we discussed this. This is where, for those of you that are looking to build out a long core portfolio, you can start selling out of the money puts, especially if you see a big vol pop. Worst case scenario is the puts go out worthless. You have a yield on your position or your portfolio, maybe 0.5%, 1%. The goal is somewhere between at least 0.25% to 2% per position per month. Net for the whole portfolio. That is somewhat of a challenge, especially in this environment where volatility is low, but it's there. So again, you go to MarketStream, you go to latest videos, and you go to Strategy Now. If you aren't able to go to the site, you can just go capture it right here. On the 21st, it's going to be listed on our Facebook page. It's go to Facebook and then go to MarketStream. It's at MarketStream. Real easy to do that. Go in and you can actually cover that. But again, what am I looking to do here? I'm looking to take advantage of a market that's pulling back, but after it pulls back, right, I might even wait to see if it challenges and breaks overnight the 50-day moving average. I might start layering some puts, and I'm actually going to look at the SPY, the spiders, because a lot of you may not have access to the S&P futures. So in this case, with the spiders basically trading at 233.86, that's where they're trading on the close. They're going to be trading a little bit lower if the market environment sticks as it is right now, which is to the downside overnight and going into the opening session. You're going to start looking at this market and you're going to start to think, well, where am I going to start laddering some puts in? I'm just going to put the price here. I'm going to look in this area right here, right? Somewhere around the 228, 229 level would be a comfort zone where I would start to sell some puts if I'm looking to build a new or add to a pre-existing position. But instead of buying the stock outright, I'm going to sell those puts, right? And I'm going to sell them. And again, I could take a look right now. Should have had this loaded up. And I know some of you are like, "Oh boy, he's talking about selling puts." But where the area that I would start looking at selling these puts would probably be where the 30 delta goes into play, and I would be looking probably somewhere in the first week of May, because it gives me some time to be right. And so right here, I'm going to look at these May 5th. This is week ones. I'm going to enable the Greeks, and this is the SPX. Sorry. So where I would be looking right here is probably somewhere down below 232. I'm going to add some more strikes. Scroll down. So I'm going to be looking in this area right here, right around the 229. That's a 28 delta. That means that it only has about a 30% probability of being in the money. I'm going to sell those probably for around, tomorrow they'll probably be trading around $1.80. So you're basically taking in $1.80. If you are assigned, now you'll own 100 shares, right? And you're going to own 100 shares from 229. That's the strike price. So that means that basically you have to have $22,000 in your account. Now, if you don't want to own the stock outright, you can buy a put below it and just basically manage your risk, right? How much do you want to risk? So if I sell these for $1.78, that means that my price that if the stock were to come down, in this case the spiders, I would be assigned a $2.29 minus the premium I receive. So let's say I take in $2. My actual price would be $2.27. So I could actually go in and sell the $2.29s, and I could buy the $2.27s and try to do that spread for somewhere around 50 cents, right? Which means that in reality, my actual cost basis would be $28.50, and I would stop losing money, or in other words, I would be risking $150 on this to make $50. It seems very sophisticated, but if you go back and watch the video that we did on the 21st under MarketStream.live, latest videos, and go to Strategy Now, that's how we're going to ladder these puts. And that's how I'm going to approach this market, both in the S&P 500, in the Dow Jones, in the NASDAQ, as well as the All-World Index, and commodities like gold, and so on and so forth. That's how I'm going to handle my risk. That's how I'm going to handle building into positions. Now that I have some volatility in the market, and we saw that volatility popped, and last week it actually settled above 13 for the first time in a long time. The last couple of sessions we've seen it, but 2 consecutive sessions with it settling above 13. I haven't seen that happen in a month. So we have volatility back in the market right now. The challenges are out there. We'll watch the overnight action and join us tomorrow morning when we go over all of the action in Asia. You will see that the Asian markets are going to be coming on very soon, overnight. As a matter of fact, if I take a look right now, I'm seeing that there's some weakness and continued weakness in the U.S. dollar. Japanese yen is still firm. We're going to see right now, the Japanese yen is actually trading up a little bit right now. So this is very interesting. We're going to watch this. You also have the Shanghai Composite's going to be opening up soon, Hang Seng. So watch that tonight. It's going to be opening up around 9 o'clock our time. And the Nikkei all opening up in a couple hours. So we're going to watch that very closely. But the U.S. markets right now in the futures are trading to the downside. They're continuing that downside. The uncertainty in Washington and what are going to be the next procedural things that the Republicans, the Democrats, what's going to happen now, it's up in the air. So we'll see how the markets are going to react tomorrow morning. All right, I'll see you tomorrow morning, 8:30 Eastern Time. Join us here at MarketStream.live. And we will be doing the overnight action report, and then we will do on the open Europe, and then we'll check out everything here in the U.S. So we'll see you then.